Hello, everyone. I'm Anthony Financial. What I'm doing here today is showing you how to analyze a company's financial records, which are called their financials, um, to determine if the stock is good or great, good to great, in that good to great range, because that's the type of stock you want to buy. Okay, and let me see. I'm sorry about that. Sorry about that background noise. Guess it's an ad running. Okay. Anyway, that's over. Um, so basically, what we're going to do here is we're going to look at a income statement. Okay, and this is an income statement for the company uh, called Sprint. It's the telephone company, and Sprint is getting a lot of attention right now because they they're about to get bought out by T-Mobile, and when companies are about to get bought out, their stock price can increase greatly. So if you look here, the stock price is currently $8.69, but it was $4.80 just a few days ago, and that's about an 80% gain in the stock price. So that's the beauty of the stock market. That's like having a savings account with an 80% interest rate, whereas the savings accounts now are about 1, maybe 2%. So just think about your yearly salary. If you made $100,000 last year, this year you would be making $180,000. So that's a great gain. That's basically you're doubling your money or doubling. You look at that example, it'd be like doubling your salary. So that's the benefits of the stock market. You can't get that in a savings account. Okay, but let's look at the financial analysis. Um, let's look at the company. So this is Sprint. Let's look at this column here. It's showing the information. Uh, it's giving you a snapshot of the income statement for the date of March the 30th, 2019, and this is the yearly. Um, this is the records for the year ending in March the 30th, 2019. Okay, so again, this is the income statement, and the income statement shows the revenues. You look right here to the left, you see the revenues um, for the companies, the total revenue. Okay, so another thing you need to look at for when you're on Yahoo Finance, this number you see, the revenue, it says 33 million 600, but you have to read it in thousands. So anytime you see millions on a site where it says all numbers in thousands, you have to multiply 1,000 times the number that you see, and that gives you 33 billion. So even though this says 33 million, if you look at this line here, it says all numbers in thousands. So that's telling you that you have to multiply the total revenues by 1,000, and that gives you 33 billion instead of 33 million. Okay. And they just do that because if you wrote $1 billion up here, that would be a lot of zeros, all right, and comma places. So they just shorten it to make it practical to fit it all on the same page. Now, if you look at this company from last year to 2018, which was March the 30th, 2018, up until March the 30th, 2019, this company has increased its revenue, which is great. You just think about on your job, if if your income, gross income increased, that's a good thing. So this company's gross income increased by about 11 billion. All right, so that's what you want to see. You want to see a company's income increasing, and that's one good sign that that's a company that you want to invest in. All right, so another thing to look at, you go back a few more years. You look at March the 30th, 2017, and compare that figure to, or that revenue figure to March the 30th, 2018, and you see from 2017 to 2018, the company actually, the revenues decreased. So you know, that was a bad sign. Um, but if you go back a little further, 2016, um, the company was about at 32 billion. So from 2016 to 2017, the company increased from 32 billion to 33 billion. So it gained about was that about 11 billion dollars. So it really only the revenues really only decreased from 2017 to 2018. And if you take that number out, it increase. If you take out the 2018 year and just omitted that, it would have increased every year. So that's a decent. It's a positive sign. Some companies have a bad year based on various reasons. There are other things to look at on the income statement, and I offer another more extensive training uh, with the income statement, and you can look at that in the link. I have a well, actually, I have an upcoming training with more extensive training about the financial analysis. Because actually, the one in the link is it's another free training like this, but you'll be able to answer me questions. I mean, you'll be able to ask me questions in real time, and I can answer that for you in real time. Um, so look, what you can do is you can send me a inbox message on my Anthony Financial IQ Rice um, business page, and you can ask me when I'll be having the pay class where I give a lot more information. This is a free training, but send me if you like more detailed information about the financial records or financial analysis. Um, just um, request more information, and I'll send you that information to your inbox. So you can inbox me, um, just asking for more information, and I'll send you the information to the paid class. All right. So let's look at the balance sheet information. All right. So this is the balance sheet. And we're going to look at the date. We're going to look at the year because this covers a whole year. The balance sheet shows all of the financial records for the year ending March 30th, 2019. Okay, so what we're going to look at on this statement, we're going to look at the, let's see, what we can look at are the total current assets. That's this line here. And again, as I mentioned before, the numbers that you see here, we're going to have to look at uh, the numbers in thousands. So that what we mean, so what that means is any number that you see here, like on this line, the total current assets for are $12 billion. Well, it actually says 12 million here, but you have to multiply times 1,000. That's going to give you 12 billion. All right, because the note at the top of the balance sheet record says in thousands. That means to uh, multiply by 1,000 to get the actual figure that you need to do any analysis. Okay, so if you look at the so it's $12 billion is the current asset, total current asset amount that we have for 2000. I believe that was 2019. So if you go back to this area, that's the 2018 total current asset. So being that this is 2018, going from 2018 to 2019, with the 2018 figure being 14 billion, going to 2019, going down to 12 billion. So what we have here is the total current asset was 14 billion in 2018. 2019 is only 12 billion. So it had decreased, and that's not a good sign. Um, so that's one thing to look at. Um, that's not that's a negative sign. But if you go back to 2017, which is this column, and the years for each column are at the top of the screen. This is 2017 here, and this is 14 billion. So from 2017, 14 billion and 117 million, and then it went up and increased to 14 billion 253 million. That's a good sign. All right. That wasn't a large gain, but let's see what the percentage is. I don't know if the calculator may not show up on this app, but I'll crunch the numbers. So 14 billion 253 million minus 14 billion 117 million. Divide that by 14 million 117. So that was it's only a gain of 0.96, which is 0.96%, which is almost 1%. So a gain is better than a loss, but not a large gain. But we'll take any gain in the revenue column. So that's what we have for that year. And if you go back, let me see, 19, 18, 17, 16, 2016, uh, the um, the total current assets were about 6 billion. And in 2000, let's see, 19, 18, 2017, it went up to, it was 14 billion. So it almost, actually more than doubled. So, that's a good sign. But then again, that could be, uh, you wonder why the jump was so large. Why was the jump so large? So, you had to do a little more research. Sometimes you have to look at the news to see why that jumped, or you have to look at the earnings call. And the earnings call is usually given out um, on the earnings date. And the earnings date is usually given out on a stock quote, which is another training, free training that I have, stock quote, stock summary. So I will go to the stock summary section, and you go down to the earnings date, and it gives you the date the earnings call is given out. And that's on the summary section right under the price. But we're going to go back to the financial section. So yeah, that's why the stock summary or the stock quote and the financials, they go hand in hand. Uh, you're dealing with stocks, you have to take all the information pertaining to the stock to do your analysis. That's why I do the stock summary training, um, which is the stock quote training, and the financial analysis training. All right, so if you like to do more training uh, pertaining to financial analysis, just click the link. You can do another free training like this. Um, the link is in the profile or the post. So again, click the link in the post to attend a free training webinar where you can interact with me in real time. Also, I offer paid trainings, um, though I go more into detail. This information is good information, but it's kind of just scratching the surface. With my pay content, I go into deep detail so that you can learn how to analyze stock to find a stock that is good to great. And these are the type of stocks that you want to use to, these are stocks you want to invest in and buy stock in. All right. So once again, you can click the link in the post to attend another free training such as this, but also reply in the comments, paid training, or send me an inbox message saying paid training, and I'll show you how to uh, uh, attend a webinar where I offer the paid training where I give more in-depth content about the financial analysis training. All right. So again, to see more in-depth financial analysis training, because this is a free training that just kind of scratches the surface, gives you introduction about the training. Just type paid training in the comments, or send me a private inbox message saying paid training for financial analysis, and I will direct you to where you can register for paid financial analysis training. Also, if you, let me see, did I put that on there for the other thing? Okay. Yeah, so I do have another free training. I mean, I have a paid training coming up showing you how to buy stock as well. Just look on one of the previous posts I've done on the Anthony Financial IQ Rights business page, because that training is coming up. It's coming up in 2 days on February the 18th. So just look at the previous posts, or actually look at the event section on my Anthony Financial IQ Rights business page. Look at the event section for February the 18th, and you'll see a how to buy stock training. That's a paid training, but it's a great investment, because the only way that you can buy stock, well, not only way, but one of the more popular ways to buy stock is by way of a online discount broker. And that's basically where you buy a stock on your own using your computer. You can actually use your phone to do it. So basically, any device, you will use your laptop, you can use your phone, your cell phone, or you can use your your tablet to do that. So again, And in order to see the in order to see the paid training on how to buy stock, um, just look in the event section on my Anthony Financial IQ Rights business page, and you'll see how to buy stock. Because the class is only $39.99, but my goal for you is to earn $100,000 up to millions in your lifetime while investing in the stock market. Um, so you can use that money for retirement or whatever, business, whatever um, goals you have for your money. But again, if you like to, in order to really learn how to buy stock in depth, step by step, go to my event section and look for my Learn How to Buy Stock training. And in that live webinar where you can interact with me in real time, I'm going to show you how to buy stock step by step. All right, because with that information, you can learn how to grow your bank account to 100 million. I'm sorry, to $100,000 up to millions of dollars. Some of you will be able to grow it to 100 million if you already have millions in there now. So it's just a numbers game. It's all based on percentages. Um, however much money you have, compound interest will grow your money um, on average about 7% each year. But in some cases, you can grow at 20% a year. And look at this. The Sprint example I showed you earlier. That the account grew, the stock grew 80%, and just like between 1 and 3 days. So these things can happen in the market, but you gotta own stock in order to be in position to capture these gains. All right. So I'm Anthony Financial Rice. I look forward to speaking with you all again. All right. You all have a great day.